Good afternoon. This is Tom Alexander. It is Sunday, June 30th. It is about 1:55 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly video update for the U.S. stock indices, focusing on the U.S. stock indices. If you are finding me for the first time on YouTube, you can go to my website and you can find a catalog of past weekend updates. They're free. Just go to alexandertrading.com, click on weekend update, and you can click on as many as you like. They include a PDF. Now, if you're finding value in these things, please like, please subscribe. That all helps promote the channel and would be much appreciated. Okay, let's talk about the market. Okay, on Friday, we had pretty dramatic reversal days in the NDX and SPX. They opened strongly, gapped up, traded higher, and then traded lower for most of the day. Now, caveat here is that the NDX and the SPX were pretty much the lone rangers in terms of that price behavior on Friday, which is consistent with what we've been seeing now increasingly, this disparity among and between various indices and sectors. But when I see something like Friday occur, is a dramatic price action, the first thing I do is to take a look across the spectrum of U.S. indices to see if there is institutional support and conviction for that idea. And the bottom line here is there was not. Now, Friday was also the last day of the quarter, last day of the 1.5 year mark. So how much the price machinations were due to rebalancing. The Russell also rebalanced on Friday. So all of these things came into the mix during Friday's trade. How much of the NDX SPX reversal, strong reversal that closed on its lows, remains to be seen. I'll also point out, and I'm going to show you some charts in a minute, we didn't break any downside levels of significance in the trade. So I can still make a bullish case. I can still make a bearish case. Let's take a look at both. We'll take a look at the charts now. So I'm going to share screen here. Okay, let's start with the SPX. By the way, these levels that you see are the important levels as we head into next week. And again, if you go to the website, you can download a PDF, you can download these charts, and you can print out and have access to the levels that you see here. But you can see this is a really dramatic reversal. Normally would be quite bearish. It's a sort of a false breakout trade for those of you that understand what a false breakout trade is through as defined by auction market concepts. But this is the first level that needs to be broken to alert to something potentially developing to the downside. Okay, that's the SPX. And then if we take a look at the NDX, similar story. We really didn't even come down and take out even test the initial level here. Okay, and then let's take a look at the Dow. The Dow held up relatively well. And then let's take a look at the Russell. Now the Russell has been all over the place, but it actually showed some relative strength last week. And once again, this is just highlighting the disparity, the huge divergence that we have among the different U.S. indices. But there's no consensus here. There's no selling conviction that, okay, the bull market has turned into a bear market, we're going to sell. And when that occurs, everything will be sold. Just like in a bull market, everything is going to be bought. Now, things are off their April lows to one degree or another, but they're all off their April lows. Okay, now this gets to a little more stark a divergence. Now, this is the NYA, the New York Composite. It's every stock. This is an index comprised of every stock on the New York Stock Exchange. And you can see we're between levels here of relative importance. And, the notable thing is that, you know, if you were just paying attention to the SPX and NDX, you would think, oh, wow, Friday's a super bearish day. And they were really only super bearish if you're looking at the SPX and NDX. If you look at these other indices, it's very much a mixed bag. Now, I want to show another perspective here. This is the profile perspective. And this is the Russell. Now, what you see on my screen, these are individual auctions. Each day is one auction. Now, I'm going to combine this, okay? I'm going to take this and combine it into the actual larger degree auction that it represents. So what you can see here clearly, there is a migration of value higher. Here's a high volume node. Here's a high volume node. Here's a high volume node. So they're stepping higher, higher, higher. That's a migration of value to the upside. That's the definition of a trend. The trend is up in the Russell on the short-term basis. Now, let's take a look at the SPX. And we're going to very clearly here. As a matter of fact, if you go, let's go back to this cash chart real quickly of the SPX. Since June 17th, we have moved a total of, I think, 12.5 points from close to close. Well, maybe 13 points. All right, 12, 13 points in 8 trade days. That's the net movement we've seen. We've gone net nowhere for 8 days, 8 trade days. Okay, back to the profile view. So here are these 8 days. You've got 1, 2, 3, 4, 5, 6, 7, and this is 8. So this is all one auction here. Let's combine the individual auctions into the larger degree auction that is of most relevance and importance right now. And here you go. So as we came into Friday at Thursday's close, we were trading above this high volume node. That was an important level. I actually had it marked for members in the membership update that I do every night. And then we closed here. And then on Friday, we gapped up, ran higher, and then basically traded straight down all day long. Now, this is important. We closed below the high volume node of this larger degree structure. That's potentially bearish. What has to happen now to restore a bullish case, and we may even find this out in Globex here in a few hours, the market needs to close above about 54.74 in the SPX. Now, the market also needs to close below the low extreme of this balance area, about 54.47, to continue to signal that maybe a top of some relative significance is in place. But the jury is very much out. When you look at the bigger picture, you look at development, you look at the other indices, and you look at the development among the indices, it's a very mixed bag. Now let's look at the technicals. This is real simple stuff. This is NYSE data. The red line you see, oscillator, it's really not an oscillator. It's a moving average. It's a 10-day moving average, 10-period moving average, in this case, day, of NYSE advancing issues. The green is a 5-day period, 5-period, in this case, 5-day moving average of NYSE advancing issues. And the histogram is breadth. Now, breadth has really been all over the place for most of the advance off of the April low. This is not telling us a whole lot that we don't already know, that we can't already confirm from price action. It's the internals need to begin to show some strength because they've gone net nowhere. We've had this furious rally, and the internals are very weak and need to pick up. You can make a case that this is a divergence. Now, all that needs to change here is for Brett to begin to pick up and then you'll see an expansion. So that's the $64,000 question here. And I would be watching the New York Composite very closely, and the Russell in particular. They're larger indices. And if they start showing some relative strength, again, it could be relative strength. They may outperform the SPX, the NDX, but you're not going to have this big crash, this significant top in the SPX, the NDX. If the broader market is doing that, it's broadening out. That should help lift everything, and it should bring firmness back into the SPX and NDX to one degree or another. And again, you could potentially see some outperformance on the case of the New York Composite, the Russell, and some of these indices that aren't driven by 5 stocks. So I guess we will have some clues early in Globex. I hope you guys have found value in this. Again, if you did, I would very much appreciate it if you would like and subscribe. Have a great weekend. I'll speak with you again soon.